As far as China is concerned, it's clear that China does not want to rock the boat. China does not want to poke the American eagle, as it were, being responsible or partly responsible for the collapse of the dollar. So while China has made contingency plans against that event, she's going to await developments, I think, before she takes a move to protect her own currency. And when she does, it's almost certain that she will also put her currency onto a gold standard. Basically, what it does is it undermines the use value of the dollar, not for US domestic purposes, but internationally. And we should bear in mind that according to the US Treasury tick figures, foreigners own, in total, roughly $32 trillion and dollar-denominated financial assets. So they won't need to hold on to that quantity of dollars. So you can see that there will be selling of dollars. Now, the problem for the sellers is, what do they buy instead? Do they go and buy another currency? Well, I've just sort of enumerated the problems of the other central banks in the major currencies. The answer to that is no. So, if they come out of the dollar, they either go into something like the Chinese yuan, or they go into gold. I think this is one reason why central banks, who have seen this coming, have been increasing their gold reserves substantially for the last 2.5 years. And that is a process which will continue. And the fascinating thing about this is, let's look at Singapore. I mean, it's rather like a canary in the coal mine. Singapore has bought enormous quantities of gold for such a small island. I mean, I can't remember. I think the population is something like 9 million or something, which is not vast. But, she's got substantial gold reserves now. Now, why is she doing this? She's doing this because Singapore is run by a Chinese diaspora. They know what's going on in China. They understand the mindset. They understand the politics of China and the whole of Asia. They can see the Shanghai Cooperation Organization business for what it is, and they know that they're in a wonderful position to really benefit from this. So what are they doing? They're setting up effectively. Not only are they setting up to protect their own currency from the demise of the dollar, which inevitably will follow, and of course all the other dependent currencies, but also they will probably become the non-Chinese regional center for gold trading. I think they plan to go in that direction. It's fascinating because silver really is entirely an industrial metal. I mean, if it was being priced as money, then the gold-silver ratio would be back to where it was at the time of Sir Isaac Newton or whatever. I mean, we'd be looking around about 15 times, something of that order. As it is, it's 78 times, so it's not priced as money at all. But the fascinating thing is that when gold rises, it rises twice as fast, or nearly twice as fast on average. The problem is that when gold stops rising, it tends to fall. But then it's very much a manipulated market. I reckon the Chinese have controlled the price very effectively for some considerable time. But they're losing that control now because the Indians are coming in with industrial demand big time to offset their carbon footprint with coal-fired power stations and all the rest of it. The government policy has been to support, subsidize, encourage large industrials in India to produce photovoltaic cells. And Reliance Industries, which is one of the big conglomerates, opened its first 5 gigawatt production facility in March. Now, I reckon that a lot of the standing for delivery that's been going on on COMEX has actually been Reliance Industries and its competitors, because where else do they get the silver? It's just not there. It's taken out elsewhere. I mean, I think we're looking at the third or fourth year of a deficit of supply compared with demand, and so the liquidity's gone from the market. And I think so. What I can see is that the price for silver will go considerably higher as this trend continues, without considering monetary factors at all. But if you look at the traditional relationship between gold and silver in the market, then market operators, I think, will tend to move the two in tandem because they've always done it that way.
The landscape of global finance is shifting dramatically, and the U.S. dollar is at the heart of this transformation. According to the U.S. Treasury's TIC, Treasury International Capital Data, foreign entities hold an astounding $32 trillion in dollar-denominated financial assets. However, as global dynamics evolve, the necessity for holding such vast amounts of dollars is diminishing. This shift undermines the international use of the dollar, not necessarily for domestic U.S. purposes, but as a global reserve currency. The looming question is, if not the dollar, then what? Investors and governments around the world are faced with a dilemma. With the erosion of confidence in the dollar and no clear alternative currency offering the same level of liquidity and stability, the options become limited. The major global currencies such as the euro, yen, or pound all have their own structural issues and vulnerabilities. This has led to an increased interest in assets that are not subject to the same fiscal and political pressures as fiat currencies, namely gold and, to a lesser extent, the Chinese yuan. For the past 2.5 years, central banks have been quietly but steadily increasing their gold reserves. This trend has not gone unnoticed by keen observers of the financial markets. The significant gold acquisitions by central banks are not merely a hedge against inflation, but a strategic move to diversify away from dollar dependence. A prime example of this shift is Singapore, a small but economically significant player. Despite its modest size and a population of around 5.7 million, Singapore has amassed substantial gold reserves. Why is Singapore buying so much gold? The city-state is a financial hub in Asia, largely influenced by the Chinese diaspora. This group has a deep understanding of the political and economic strategies of China and the broader Asian region. Singapore's leaders see the Shanghai Cooperation Organization, SCO, and its growing influence as a signal of shifting economic power. By bolstering its gold reserves, Singapore is not only safeguarding its currency from potential dollar depreciation, but also positioning itself as a key player in the regional gold market. The unique properties of gold and silver make them invaluable in this new financial landscape. While gold is universally recognized as a store of value, silver has dual utility, both as an industrial metal and as a monetary asset. Interestingly, the current market treats silver predominantly as an industrial commodity, evidenced by the high gold-to-silver ratio, which stands around 78.1. Historically, this ratio has been much lower, around 15:1, suggesting that silver is undervalued as a monetary asset. As gold prices rise, silver typically follows, often outpacing gold's gains. This phenomenon is partly due to silver's smaller market size and its greater price volatility. However, the rise in silver prices is not merely speculative. There's a growing demand for silver in industrial applications, particularly in the production of photovoltaic cells for solar energy, which India is heavily investing in. Companies like Reliance Industries are leading the charge, opening large-scale production facilities to meet this demand. China and India are not just major consumers of gold and silver, they are also significant players in the global supply chain. China, for instance, has been the largest producer and importer of gold for years. The country has also been quietly accumulating silver mines globally, securing a steady supply of this critical resource. This strategy is part of a broader move by China to hedge against the decline of the dollar and to position itself as a leader in the global commodities market. India, on the other hand, has traditionally been one of the largest consumers of gold. While the Indian government has often tried to curb gold imports to manage the current account deficit, it has recently started increasing its gold reserves. This shift is a recognition of the changing geopolitical landscape and the need to secure a stable store of value. Despite India's cautious approach, the country is slowly but surely increasing its gold holdings, a clear indication that it is preparing for a potential realignment in global currencies. Silver's unique position as both a precious metal and an industrial commodity makes it a particularly interesting asset. Unlike gold, which is primarily a store of value, silver has extensive industrial uses, especially in electronics and renewable energy. The global push for greener technologies has led to increased demand for silver, particularly in the production of solar panels. This demand is expected to continue growing, further tightening the supply-demand dynamics.
I mean, there are senior Russians who do understand the benefits of putting the currency on a gold standard. I mean, I'll give you an example as to why it really would be very, very good for Russia. At the moment, the central bank's deposit rate is 16%, and that's what's needed to stabilize the ruble. If the ruble went on to a gold standard, then practically for Russian banks, for example, Chinese banks, other banks, it would make sense for them to buy gold in the West, where the yield is 2%, sell it to the Central Bank of Russia in return for rubles, which linked to gold is a gold substitute, and they're picking up 14% on the way. What's not to like?
Yeah.
That is actually the way in which you manage a gold standard. You don't use interest rates to try and manage the economy. You use interest rates to manage your gold reserves. And that was learned the hard way in the wake of the 1844 Bank Charter Act in the UK, because it failed something like 3 times before they actually realized that you don't use interest rates to try and manage an economic outcome or to manage the banking system. What you do is use it to exclusively manage your gold reserves, and then you don't have a problem. So on that basis, it's very easy for Russia to stabilize her situation. And just think of the benefits. Interest rates would then decline. Russians in business would find that they can, if you like, their business calculations become a lot more profitable. It means that they will be able to cut the cost of their output and all the rest of it. It would be like another industrial revolution. I mean, it would be fantastic for Russia. And it would actually get her away from having to rely on the export of commodities in order to have a surplus on A, her balance of trade, and B, on her budget. The situation in Russia is that taxes, if you look at personal income tax, it's around about 13%. The higher rate is 15%. I mean, these are levels we dream of. Corporation tax is 25%, admittedly. The government debt to GDP is, and this is despite the war and all the financing of the battles against Ukraine, debt to GDP is only 21 or 22%. So you can see that actually Russia is in an amazing situation, and she can easily go onto a gold standard. And she has been pushing for this. She wanted to get gold, a gold-backed currency onto the agenda at the last BRICS meeting, but it was turned down by China and India. India does not want to upset the West. India is not in a position, really, to consider a gold standard because she's been in denial about gold for God knows how long. She's tried to stop her citizens from buying it. It's only recently that she started increasing her gold reserves once she realized the geopolitical situation she was in. As far as China is concerned, it's clear that China does not want to rock the boat. China does not want to poke the American eagle, as it were, being responsible or partly responsible for the collapse of the dollar. So while China has made contingency plans against that event, she's going to await developments, I think, before she takes a move to protect her own currency. And when she does, it's almost certain that she will also put her currency onto a gold standard.
The COMEX and LBNMA have been accused of manipulating silver prices through the excessive issuance of paper contracts that far exceed the actual physical supply. This manipulation has kept silver prices artificially low, allowing major players to accumulate large quantities of the metal at suppressed prices. However, as industrial demand for silver increases, this artificial suppression may become untenable, leading to a significant revaluation of silver prices. The idea of a new gold standard has been floated by several financial analysts and policymakers. In a world where fiat currencies are increasingly seen as unreliable, a return to a gold-backed currency system could provide much-needed stability. Russia has been a vocal proponent of this idea. With its substantial gold reserves and relatively low national debt, Russia is in a strong position to adopt a gold standard. This move could stabilize the ruble, reduce inflation, and encourage investment in the Russian economy. For Russia, the benefits of a gold standard are clear. It would provide a stable currency, reduce reliance on commodity exports, and attract foreign investment. The economic fundamentals in Russia, such as low personal income tax rates and manageable government debt, make it an ideal candidate for such a system. The Russian government has already been preparing for this possibility, steadily increasing its gold reserves and encouraging domestic production. While Russia may be eager to push for a gold-backed currency, China and India have been more cautious. China, in particular, does not want to precipitate a collapse of the dollar, which could lead to economic instability. Despite this, China has made contingency plans to protect its economy should the dollar weaken significantly. The country has been diversifying its foreign exchange reserves and increasing its holdings of tangible assets like gold and silver. India, meanwhile, has been more conservative in its approach. The Indian government has traditionally discouraged gold hoarding among its citizens, viewing it as an unproductive use of capital. However, the recent geopolitical developments have led to a re-evaluation of this stance. India is now quietly increasing its gold reserves, preparing for the possibility of a significant shift in the global economic landscape. The erosion of the dollar's dominance is a complex process, influenced by geopolitical, economic, and financial factors. As countries diversify their reserves and seek alternatives to the dollar, the demand for gold and silver is likely to increase. This shift is not just about hedging against inflation. It's a strategic move to secure financial stability in an increasingly uncertain world. The rise of digital currencies, particularly central bank digital currencies, CBDCs, adds another layer to this complex picture. While CBDCs offer many benefits, including ease of transaction and traceability, they also pose risks. In a world where governments can manipulate digital currencies, tangible assets like gold and silver offer a hedge against potential monetary policy abuses. In conclusion, the global financial landscape is undergoing a seismic shift. The decline of the dollar, the rise of gold and silver as alternative stores of value, and the emergence of new financial systems like Project and Bridge are all indicators of a new era. For investors, this presents both challenges and opportunities. The key is to stay informed and agile, adapting to the rapidly changing economic environment. As we move forward, it's crucial to consider the broader implications of these shifts. The changing role of the US dollar, the increasing importance of precious metals, and the rise of digital currencies all point towards a more diversified and resilient global economy. For those invested in these markets, understanding the underlying dynamics will be key to navigating the challenges and seizing the opportunities that lie ahead. Thank you for joining us in this exploration of the evolving financial landscape. As always, stay curious, stay informed, and stay strategic. The future is uncertain, but with the right knowledge and preparation, you can navigate these changes successfully. Let's continue to explore the value of gold, silver, and digital currencies in this rapidly evolving world and secure a prosperous future for ourselves and the generations to come. Whether you're an investor, a policymaker, or just someone interested in global economics, these are exciting times filled with opportunities and challenges alike.
Stay informed about the latest developments shaping the precious metals market with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today. Link in the description.